Welcome to the Roy Morgan Weekly Update, and what a confusing week it's been. ALP primary vote up, but on a two-party preferred basis is down. Confused? More Australians employed and more unemployed, and interest rates keep on going up. So let's first look at the context. The Federal Parliament is now adjourned after its first two sitting weeks, and along with the maiden speeches given by many of the new members of Parliament, there have been some significant pieces of legislation passed. So in a week that saw the Albanese government formally legislate for Australia to cut its carbon dioxide emissions by 43% by 2030, reflecting its federal election commitment, and reforms to Australia's aged care system in line with the recommendations of the Royal Commission, support for the ALP increased, at least in terms of primary vote. The ALP support is up 1% to 37%. However, this didn't translate to a two-party preferred vote. Why? Well, because the Greens and other minor parties lost support, 3.5%, and that went to the majors, 2.5% to the Coalition and 1% to Labor. So on a two-party preferred basis, the latest Roy Morgan poll shows ALP support has dropped for the second straight week, and ALP is down 1.5% to 52.5%. But of course that retains a lead over the Coalition on 47.5%, even though it was up 1.5 points in a week on a two-party preferred basis, obviously. And with slightly more Australians now saying the country's going in the right direction, 42%, up 1 point in a week, than the wrong direction, 40.5%, the Roy Morgan government confidence rating is virtually unchanged this week at 101.5, up 0.5 points. Economically, the Reserve Bank's decision to lift interest rates last week has really hit consumer confidence hard. The latest ANZ Roy Morgan Consumer Confidence Rating is down by 3.8 points to 80.3, its lowest number since the pandemic hit in April 2020. Unpicking these interest rates, the Reserve Bank's decision to increase interest rates by another 0.5% to 1.85% means the official cash rate is now at its highest for over 6 years, since May 2016. This is still well below the long-term average of around 4% since 1992, but the Reserve Bank has flagged further interest rates to come. The total increase that we've seen of 1.75% over the last 4 months is the same, coincidentally, as the total increase just after the global financial crisis in 2009 and 10. There is, however, increasing commentary among economists that the Reserve Bank will need to tread more lightly with the next few rises. Consumer confidence, as we just saw, is crashing. Retail sales growth is slowing, and inflation appears to be stabilising. Given that, and given that setting, it wouldn't take much for the economy to tip over into recession. So let's now take a more detailed look at consumer confidence. If we look at consumer confidence by housing status, which is what we've been tracking for the last few months, it shows where consumer confidence is lowest. And this week, the big fall was for people who own their own home, with consumer confidence falling 5.9 points, almost 6 points, to only 78.6. This is the first time the ratings dipped below 80 for this group. Now, we've been looking at the consumer confidence of people paying off their homes, but now it's impacting on those who have already paid off their home. So those people paying off their homes, those with mortgages, consumer confidence is at only 78. And consumer confidence for these two groups, who comprise about 2/3 of all Australians, has fallen massively since the Reserve Bank began the current interest rate increasing cycle in early May. In contrast, consumer confidence of people who are renting is only down by 4.2 points to 85.5 during the last few months. But these are all low numbers. The last week, Australia's inflation expectations were fairly stable at 5.6%, a minor increase of 0.1%. This small increase follows a much larger fall last week when the measure dipped by 0.5 percentage points, likely due to petrol prices, which have dropped by nearly 40 cents per litre over the last 4 weeks. Now, inflation expectations or inflation fears are not the same for everyone. Our data scientists have analysed the socioeconomic context and find clear correlations between socioeconomics and inflation expectations. I wonder which way it goes. People in the top socioeconomic group, known by many as the AB quintile, have the lowest inflation expectations at 5.3%, lower than any other quintile. People in the lowest socioeconomic group, known as the FG quintile, have the highest inflation expectations at 6.2%, nearly a full percentage point higher than those in the top quintile. These results show clearly that inflation expectation or inflation fears are greatest among those least able to deal with the rising prices. Now, unemployment. We've been saying for some time that unemployment is the wild card, and it truly is. The latest Roy Morgan headline unemployment measure for July shows Australian unemployment increasing to 8.5% as the workforce increased to 14.7 million Australians. Unpacking this conundrum, and it is a conundrum, July saw more people employed, 8,000 more full-time and 66,000 more part-time, and more people looking for work or more people unemployed, 121,000 more than last month. So the workforce, that's employed people, the number employed, plus the number looking for work, the workforce increased by almost 200,000, by 195,000. Now, a key driver of this increase was for people aged 50 to 64, entering or re-entering the workforce, both looking for work and finding work. People in this age group are more likely than the average Australian to have a mortgage, and the pressure of increasing inflation and interest rates are clearly forcing families with mortgages to find new sources of income. These employment figures indicate people in this age group are returning to the workforce in response to these pressures. Looking at an industry level, Roy Morgan data shows the construction and retail industries adding the largest number of new jobs, both full-time and part-time, in July, while the industries that showed declining employment levels or were taking away jobs were led by recreation and personal services and finance and insurance. Now, if we include those who are working but want more hours, the people we call underemployed, Roy Morgan records over 2.5 million Australian workers who want to either find a job, the unemployed, or find a job that allows them to work more hours, the underemployed. 2.5 million of them. So while we hear a lot about labour shortages, the Roy Morgan data shows there remains a large cohort of people who are just beginning to join or rejoin the labour force, looking for work and getting work. And that's a wrap for this week. So subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening, and I look forward to joining you next week when we'll have the latest data on consumer confidence, inflation expectations and voting intention. Take care. See you next week.